Piotroski F-score. What is this F-score and should you actually use it to pick stocks? Piotroski F-score is a score between 0 and 9 to indicate financial health of a company in three areas: profitability, whether the company is using right level of leverage or not, and whether the company is being run efficiently. Based on these three areas, you find out whether the company is financially healthy or not, and then you decide to include that in your stock portfolio, which eventually generates better return than the market. To calculate the stock F-score, you look at 9 ratios across three areas and add 1 point every time the criteria is being met. So for profitability, look at whether the company is generating net income or not. Second, look at whether the company has positive return on asset or not. And then look at whether the company is able to generate positive operating cash flow or not. And then also look at whether the cash flow from operations is higher than net income. For leverage and the source of fund, you want to look at the proof that the company is decreasing leverage over a period of from last year to current year. The company is being more liquid from last year to current year by looking at the current ratio, and whether the company is not diluting the current shareholder equity by issuing more shares. For operational efficiency, you want to look at whether the company is able to increase its gross margin, and also whether the company is able to increase its asset turnover from last year. Does it work, and should you actually use it? In the paper published in late 90s, the author was able to backtest this strategy from 1976 to 1996 over that 20-year period, and was able to prove that the strategy generated return more than 30%. So 13% over the market. There have been other studies. You can just Google just Google for whether F-score works or not. And there have been studies. Some are showing basically that it continues to work, and some are showing that it does not work as effectively as was claimed in the paper. However, it's a very important score, and it does seems to indicate the financial health of a company. My suggestion would be to combine it with other quantitative and qualitative parameters. So, for example, along with the F-score, you might want to look at the trend for that company, the industry in which the company operates, whether the management is good and the management has not been changed recently, which might indicate that whatever performance the company has been generating so far will continue to be delivered or not.